Good to have you with us on this Thursday morning, folks. As we move into the second half, there's no bigger question than that of the economy. Where is it headed, especially if interest rates keep climbing? Can central banks like the Federal Reserve and the Bank of Canada remain hawkish as recession risks rise? Do we really know if inflation will stay elevated for the foreseeable future? Well, we felt we needed to dive deeper into all of these issues and to a certain extent debate them. And this morning we are joined by two of the best known names on Bay Street to really sink our teeth into this topic. David Rosenberg needs no introduction, but he'll get one. He is one of the most closely followed economists and currently serves as president of Rosenberg Research. And bond market watchers, well familiar with Ed Devlin, formerly head of Canadian portfolio management at PIMCO, one of the most influential fixed income investors in the world. And Ed has since founded Devlin Capital. He also serves as a senior fellow at the Howe Institute. Welcome to both of you, coming together, the band, so to speak. And nice to see you, by the way. We've seen you on Zoom for a couple of years here. Appreciate you coming in.
Well, it's great to be here. I thought you were going to build me my own bookshelf.
Yes,
but,
I know.
You didn't do that.
I was, well, you know, just remind me of how many books apparently you've read that I haven't read.
Like I was telling Ed, the last chapter of each one.
Okay,
just get to the punchline.
Okay, well, how about we do just that? Let's get to the points. What everybody's wondering, what do you think's going to happen to the economy?
Well, look, I think that the seeds of a recession are already being sown, and I started talking about that a lot more when the yield curves in Canada and the United States started to invert, which was basically last June, July. It's been about a year. And I wasn't saying that the recession was going to start imminently, but I was saying that when you got these central banks fighting inflation this hard, that they raise rates into an inverted yield curve, you're going to get a recession. Now, trying to pinpoint, day, week, month, quarter, next to impossible because the lags, as we all know, are long and variable. They could sometimes invert the yield curve and the recession starts right away. Then there's other times that, it could take about 18 months. And what's really dragged this out, and I know that people calling for recession have been frustrated, like, where is it already? But you see, in both countries, we've had the lagged impact of all that fiscal stimulus coming out of COVID. That's been with us ever since, but it's subsiding. And I think especially in the United States, the last vestiges of the fiscal stimulus, it was the Energizer Bunny that left all this excess savings in household pocketbooks. That's coming to an end right now. So on top of that, we're going to see all the lagged impacts. You got to keep in mind that, the economy, no matter what economy you're talking about, they reset with a lag into these higher rates. Like even in Canada, we haven't seen all the impact, right? Like even if the Bank of Canada did nothing and just kept rates stable, you're going to have a ton of people that are going to be rolling over their debt into a perniciously higher interest rate environment compared to the interest rate that they took on the debt initially. We haven't seen all that play out yet. I think that when that bumps against the lack of fiscal stimulus, we're going to see a much different economy. So I think that the recession, and look, it was in the FOMC minutes yesterday, too. The one thing that the Fed staffers did not back away from is their view that in the United States, a recession is going to be starting in the second half of the year. That's the Fed staff's view. I have their view. And then we all know in Canada, the U.S. catches a cold and we'll get somewhere between a sniffle and pneumonia out of it.
So you're nodding your head a lot, Ed, here.
Yeah, no, I agree completely. And I think the other couple of factors you kind of throw into the mix is, this has been it's been a pandemic, once in 100 years. So if you think about supply chains and look at what's going on with China, obviously China's slowing down a lot. But with, it'll be interesting to watch Yellen in China this week is, I'm looking at the balkanization of trade. Do some of those trade barriers come down? That'll be, good for inflation, or do they stay elevated, and will that kind of mess with our models in terms of trying to time, when the rates will roll over and the banks can cut? So I think that I think that, and then I think the other thing in Canada that's kind of unique or something to watch is the immigration and the supply and demand for housing. So I would have expected prices to fall actually more than they have here in Canada. But if you think about it, we've gotten some restrictions on supply. We've got taken a lot of immigration in, good, skilled immigration. It's great for productivity, et cetera. But, there's a few variables in here that are just making it a little muddled, I would say. But beyond that muddling of the darkness of the water, I'm kind of with David in the sense of, raising rates 400 or 500 basis points and then pinning us, the Goldilocks slowdown, not too hot, not too cold. I don't buy it.
Yeah, I mean, this is fascinating. You guys are two of the smartest. It took a while to get through those opening statements, and because we're talking in part about some very long-term issues that we're trying to figure out, whether it's on immigration policy or, global, barriers to trade and how things like inflation, David, fit into that. But central banks really struggled to figure out the inflation story coming out of the pandemic, and they have been incredibly aggressive in fighting inflation with these higher rates at this robust rate. And I think that every day we sit here and we try to figure out what the central banks are going to do next. How do you feel about what they're still saying now, considering the recession risks that you just outlined for us?
Well, what I think is very interesting to me, and I'll actually say this is more of an acute situation in the U.S. than in Canada, but I'll say both central banks seem to be focused on coincident and lagging indicators. They don't seem to have a lot of faith in their models, and they don't seem to have a lot of confidence in their forecasts. So you see, they're flying blind. I mean, when you start hearing about we're data dependent, the data that they're dependent on are backward-looking indicators. And yet we know that monetary policy hits the economy in both directions with lags that are measured in months and quarters, sometimes even years. So I find it disconcerting. It's telling me that we are going to have a policy mistake in the opposite direction, unless, of course, John, maybe it's not a mistake. Maybe they deliberately are so freaked out about inflation that they feel behind closed doors they have to create the conditions for a recession, which is demand destruction, to crush inflation. Because to be raising rates and to be talking so hawkishly after you've already inverted the yield curve, historically, and this is where these central banks, the Fed and the Bank of Canada today, they've taken a step away from their predecessors, because normally once you've gone this far, you stop and assess. Not for one meeting. Now, I'll tip my hat to Tiff Macklem. At least he waited like a couple of months before the Fed waits one meeting. Historically, when you're taking a look at when the Fed pauses, it's not one particular piece of data. They just realize they've done enough, sit, assess for a period of months. And remember, that's what they did. Can you imagine if they kept on tightening? I think their last tightening, for example, was in the spring of 2006, okay? Can you imagine if they kept on tightening, knowing what happened in 07 and 08 and 09? Can you imagine if they kept on raising rates? And you couldn't have sold that story in 06 because people can't see past the tip of their nose. You see, everybody lives in the here and now. Yeah. What I'm saying is that they've already made, I think they've made, unless they are, if they wanted to avoid a recession, if they have the Goldilocks scenario of a soft landing, I think that is a classic case of hope triumphing over experience. So I think that the people that are saying today, well, where is this recession already, are going to be saying within 6 months, there it is. The wolf showed up at the end of the story.
So we have to take a break shortly, Ed, but what would be the harm? Let's say the Bank of Canada has another interest rate decision next week. What would be the harm of saying we've raised rates a lot? I know inflation is not where we'd like it to be, but there was a lot of, to David's point, a lot of stimulus through the pandemic. And we're starting to work through that. And even though we've seen resiliency for the economy, there is a danger in continuing down this path. I just don't think that's the kind of language they're going to use, at least in that kind of description next week. How come? What is the risk of is it just animal spirits or?
So I think that that's what they should have done last meeting. Right, so that was my suggestion. So I think they've tipped their hand by hiking last meeting. I think the risk here really gets down to, David hit the nail on the head. They don't trust their models. The reason they don't trust the models is because, again, it was a pandemic. They threw the kitchen sink at it, and we've never done that much in terms of kitchen sinking policy, and then reconfigured these supply chains, and now they're just not trusting their models on the way up. And so the second part of it is, who wants to be the central banker that brought back inflation? Right. Paul Volcker goes down in history as a hero. The Bank of Canada did heroic work when they first started targeting inflation. Does Tiff or Powell really want to be the one that let the inflation genie out of the bottle? They'd rather go down as the one that caused the recession.
All right.